investors and traders, and welcome to the weekly market report with Market Guys. I'm AJ Monty. I'm going to do something a little bit differently than what I've done in the past and start off with a snapshot from the chart that I used last week. And as you can see, this is a chart of the diamonds, ticker symbol DIA, and I've drawn my lines of resistance and support. Again, this is just a snapshot from the video I emailed out to you last week, and this diagonal line is the forecasted trend in what I thought would happen this week. So if we fast forward, you'll see that the market followed that line perfectly. I mean, it can't get any better than that. We had 5 days of down market activity with red candles, and we had a higher volume spike, which tells us that the sellers are motivated and they continue to stay motivated. But what I'm going to do is I'm going to erase this line from last week, and I'm going to draw my new forecast so you can see how this plays out next week. I mean, that's the whole point of technical analysis, is to be able to forecast price movement based on past price history. So because this is a spinning top, that tells us that the sellers might be getting a little bit tired, but the volume is still high. So what I think is going to happen is we might see another down day or two to retest that downward leg, and then I think what will happen is we'll start to move back up in an attempt to stay within this channel. So again, this isn't rocket science. It's not voodoo magic. It's simply being able to look at the signals and read the market based on supply and demand and the force behind each move. So that's the diamonds. So if I go to the next market from last week's report, you'll see this is a chart of the Russell 2000, ticker symbol RUT. And I drew my line up here showing resistance. It was more of a diagonal line. I also drew a role reversal line that would act as support, and I said that I believe the market would pull back to test that support level. That's what that diagonal line is. So again, fast forward, and you'll see that yes, we in fact breached that line just a little bit, but we came right back down to follow my forecasted trend line to retest the role reversal support level right there. So I'm going to erase this line. In fact, I'm going to erase all lines to redraw what I think is going to happen next week, and then you can track me all over again so you can see the level of accuracy that we're talking about right here. What I believe is going to happen is, because this is a long shadow right here, I think we're going to test this role reversal, form a resistance. Once broken here, turns to support. So what I think is going to happen is I think we're going to bounce off of this line just like that. And I'm going to leave that in place so you can test the accuracy of the charts once again as you follow along with the Market Guys. Now moving right along, this is the chart of the spiders, ticker symbol SPY, so S&P 500 ETF. This is a daily candle chart of the SPY from last week's report, and you can see resistance held, and we drew this line as a diagonal to more or less forecast the price action for this week. Again, going to the live chart, you'll see that we followed that line perfectly right to this level where I said we would test support, and now we have a long shadowed candle. The key here is looking at the volume. You see this volume here? It's still increasing. So what I believe is going to happen is I think the volume will start to drop as the sellers get more tired, and I think that we can absolutely see a lower volume bar on Monday or Tuesday, and I think that we could eventually move back up from that support level, staying again within this trading range. I will erase this line here, and I will erase this line here, and I'm going to redraw my support as follows. We take that low, connect it to that low, connect it to this low, connect as many of these lows as we can, and there you go. That's why I started my line here, because I think we could absolutely bounce off of this trend line and then on our way up to retest resistance. So we're kind of stuck in a trading range. Nothing surprising about that. It's been that way for a few weeks, and we're just following the movement of the market. So let's go now to the Qs. This is a daily candle chart of QQQ from last week's report. same thing, same scenario, resistance, support, trend lines. This was my forecast in what I thought the trend would look like. I even anticipate a little bit of a bounce off that trend. What does it look like this week? And there we go, following that line perfectly on higher volume. So I think I'm going to keep this in place. This is the only chart where I think it's following the trend nicely. I think the candle is long enough and red enough with the higher volume to keep this moving down. So I'm going to keep this as a support and will follow that next week as well. Finally, I talked about the VIX. This is the volatility index. These were my lines from last week. I'm not going to go back and forth. I'm just going to show you. This is exactly where I drew my lines. This is exactly what happened with the VIX. It pulled back up. It bounced off the support down here. And I'm going to leave this line in place as well. I still think the VIX has a little bit ways to go. On the upside, it's going to stay in this range right in here. And we'll leave that in place as well as it's stuck in the trading range. Now, the Market Guys has a Facebook page. I invite all of you to subscribe by simply clicking on the like button. You can go to the Market Guys website and visit our video page where we have a bunch of educational videos that you can watch and learn from. And our goal is to educate the public on ways that will help them make more money by limiting the risk and even in many cases completely reducing it and following along with the trend so you're putting the odds in your favor. We get very excited about this, and I hope you are too. So follow along with the Market Guys each and every week, and I look forward to next week's market report. So long.